Hi, everybody. Thank you for joining us today. We are excited to have John Bria joining us today. And John is the Director of Client Development at the CME Group, and he will be presenting an introduction to micro Ether futures, which is a new contract offered by the CME Group and has only been available for trading since early December of last year. Before we get started on John's presentation, we would like to talk about how the CME Group and Tradovate work together. While today's webinar focuses on the micro Ether futures, the CME Group offers a wide range of products that are available on Tradovate. We would encourage you to check out the CME Resource Center on the Tradovate website under the Knowledge tab. At the CME Resource Center, you can find heat maps and trading insights and more. We also encourage you to visit the CME Group's website at cmegroup.com for a wealth of information on trading futures. All right, before we get started, let's go over the standard disclaimer. Brokerage services are provided by Tradovate. Tradovate is a member of the NFA and registered with the CFTC. This is not an offer or solicitation for brokerage services or other products or services in any jurisdiction where Tradovate is not authorized to do business, or where such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves a substantial risk of loss and is not suitable for all investors. Investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. All right, well, after the presentation, we will open up for questions. So you can use the Zoom chat and post those questions in there, and then John and I would be happy to go over those at the end. All right, well, I'd like to now present John Bria of the CME. So welcome, John.
Thank you, Bastian, for that introduction. And I want to say big thanks to Tradovate for hosting today's event. This is the first one that I'm doing this year, and I'm excited to be here to talk about our micro Ether futures contracts that we launched on December 6th of 2021. So these contracts are just over a month old. So let's get into it because we have a lot of information that I want to cover today. So we at CME Group, we have a disclaimer as well. So on behalf of CME, we want to acknowledge that futures trading isn't suitable for all investors. Futures are leveraged products that involve the risk of loss. So before going into any new contract or futures in general, if you're new to our markets, please ensure that you're doing all your homework and you're properly educated on the products and markets that you're looking to trade. Okay, so here's a brief overview of the agenda. I've split it up into 3 parts. In the first part, we're going to talk about crypto and crypto futures at CME Group. Part 2, we're going to talk about futures fundamentals for those that are new to our markets and the features of our new micro Ether contracts. And then part 3, we're going to round it out talking about the various ways that we've seen people trade these products over the last month. Going into it. Ethereum and Ether overview. What is Ethereum? And Ethereum it's basically an infrastructure operating as a decentralized network on top of which applications can be built. And specifically, applications like smart contracts are built on Ethereum. And what a smart contract is, it's a computer program or a transaction protocol that's intended to execute, control, or document legally relevant events and actions according to the terms of a contract or an agreement. And what Ether is, similar to how you think of Bitcoin, Ether is the cryptocurrency of Ethereum. So Ether debuted back in 2015, so it's just about 7 years old now. And when it came to market, it was trading at less than $3. So where it's trading at a little over 3,000 today. So in 7 years, it's seen a significant price appreciation. And unlike Bitcoin, Ether doesn't have a finite amount in circulation. Bitcoin has a finite amount of 21 million Bitcoin. Ether doesn't have that cap. Ether doesn't have an issuance limit, and per its initial presale, Ether is capped to 18 million per year. So why did we launch these micro Ether futures? So it's quite simple. The main reason why we launched these contracts is customer demand. A lot of what we do at CME Group, a lot of our innovation over the last 170 years in existence has come from what our customers are telling us. And we launched a standard Ether contract in early last year, and we'll go over the timeline of our crypto complex. But we launched a standard Ether contract that was relatively large at the time. It consists of 50 Ether, and at the time that we launched it, Ether was trading, I think, under $1,000 at that time. So as Ether's price appreciated, customers came to us, especially the active individual trading customers came to us and said that standard contract is getting too large for us to trade. We need a micro. And with the advent of micros back in 2009, and again in 2019, when we launched our micro equity complex, the popularity of that micro complex really got customers saying, we need a micro Ether. We need a small Ether contract that is available to the masses, that, I shouldn't say to the masses, but is available for people to express an opinion or hedge their spot risk at a more precise level. So customer demand really got us to where we are today. And then in addition to that is that underlying blockchain technology is really gaining widespread acceptance, especially over the last 5+ years. It's really here to stay. And it seems like every week, every month, we're seeing either financial institutions coming out and saying that they're adopting blockchain technology in one way or another, or they're accepting, some retail institutions are accepting cryptocurrency in exchange for goods. So we're seeing that blockchain technology and cryptocurrency really gain that mainstream acceptance. And then we're seeing these very low interest rates and monetary stimulus pushing money out there, and people are putting some of that money into alternatives, into Bitcoin, into Ether, into other cryptocurrencies as well. And the volatility in these markets really attracting traders and investors to come and capitalize on that price movement, but also to lay off their risk that they have on the underlying cash position that they may own. And then last year, you see CME Group's crypto futures complex allows for risk management on a regulated exchange. We are regulated by the CFTC, so all of our futures contracts are traded on our exchange on a central limit order book via our clearinghouse that has over 170 years experience of managing risk. So these are the various reasons why we launched this contract, and why we're confident that the people trading it are using it in an advantageous and value-added way. So taking a look at the top 10 cryptocurrencies by market cap, this is a little outdated with the price of depreciation recently in cryptocurrency, but Ethereum is still the second largest cryptocurrency by market cap. And you look at it today, it's a little less than 400 million. Bitcoin is the largest cryptocurrency by market cap. Today, it's a little under 800 billion, I believe. So Ether being the second largest cryptocurrency by market cap, it just made sense for us to, when we're expanding our cryptocurrency complex, especially on the micro level, Ether is the logical next progression for us. And I love this slide because it puts cryptocurrency, especially Bitcoin and Ether, for me, into perspective of just how large these markets are. And when you look at the market cap of gold, gold has almost a 12 trillion market cap. It's enormous. When you look at Microsoft, Apple, Google, they're in the trillions. But right behind that, you see Bitcoin. You see Bitcoin now they're at around 800 billion, and Ether is at just under 400 billion. But when you put that into perspective, Ether at 400 billion market cap is just around the same size as Walmart. Walmart, I believe, is the 20th largest company by market cap in the world. So these markets are enormous, and the potential here is enormous. So taking a look at the timeline of how we got to where we're at today in terms of cryptocurrency products at CME Group. Our first foray into this market was back in 2016 when we launched our Bitcoin reference rate. What that is we take the pricing from the top 5 spot cryptocurrency exchanges by volume. We take those prices and generate an average price. So we have one standard price that is shown on CME Group markets, where on the spot side, you might have price disparity from one exchange to the other. So we created a Bitcoin reference rate back in 2016, and then we launched our Bitcoin futures contracts in December of 2017, when Bitcoin was trading just under 20,000. So our Bitcoin futures launched in 2017, and that brought us to 2018 when we launched our Ether dollar reference rate. And that is the same thing as our Bitcoin reference rate, where we take the Ether price from the top 5 spot exchanges by volume, and that average price is what our Ether contracts are based on. In 2020, we launched Bitcoin options. In February 21, we launched our Ether futures. Again, that is our standard Ether futures that I touched on earlier. These are 50 Ether per contract, so they're relatively large. In May of 2021, we launched our micro Bitcoin futures, which is 1/10 the size of one Bitcoin. And then today, or back on December 6th of 2021, we launched our micro Ether futures. And the size of these are in line with our other micros in that micro Ether futures are 1/10 of one Ether. So with Ether trading today right around, I believe right now it's around 3,200, the notional value of one micro Ether futures contract is $320. So it's 1/10 of one Ether. So taking a look at how this contract has performed in just over 1 month of trading, what we've seen is just over 319,000 total micro Ether contracts traded in just over a month. We're averaging roughly 13,000 contracts a day since launch. And when you look at this year, it's only been about 5 trading days, right? We're averaging just over 18,000 contracts a day. Last Friday, we saw a record volume day of almost 33,000 contracts traded. But what I think is most important here is that we're really seeing global participation in this micro Ether market, and it's a very young new market. And in just over a month, we've seen participation coming from 47 different countries, which, in my opinion, it's incredible. It's validation that the marketplace wanted this contract. It's validation that people are looking at cryptocurrency for various reasons, to speculate or manage some of that risk. When you look at the right-hand side, you see that we've just, as of yesterday, we've just set an open interest record in micro Ether at almost 35,000 contracts. So what that's telling us is that people are buying these contracts and holding these contracts. There's not just day trading in and out of these contracts. There's a really healthy mix of market participants in this market very quickly, which is really encouraging to us from an exchange standpoint to see a diverse set of participants in this market. When you take a look at cryptocurrency at CME Group and just our growth since 2017, take a look from Q4 of 17 to about Q1 of 21. It's hovering right around, that 5,000 mark. It jumps up to 10,000, and these are ADV. Everything on this slide quoted or is ADV, right? So you look at 17 to Q1 of 21, we're doing some volume in our cryptocurrency complex, but it really takes off. Our volumes really take off in Q2 of 2021. And that's when we launched our micro Bitcoin contracts. And what we believe is that those micro contracts that we launched back in May really opened up these markets to a whole new set of people, and they saw all the various cryptocurrency products that we offer. And our volumes, as you can see here, our volumes increased because of that. We lowered the barrier to entry. People saw these products that we have, and they're trading them. That's really encouraging to us, and it validates the innovation that we do, and it validates our customers' feedback too. It's not only the customers that came to us that wanted these products, there's other customers out there that didn't come to us that are trading them today too. And then when you take a look at Bitcoin futures volume in Bitcoin equivalent versus some of our competitors, what this slide is really showing us is that people are coming to CME Group to trade cryptocurrency derivatives, and they're coming to CME Group to manage risk, but to also speculate. And we are trading the most in Bitcoin equivalent versus our peers. Crypto equivalent derivatives. Okay, so let's take a look at these micro Ether contracts. Looking at the contract specs here. Like I said earlier, the contract size on these micros are 1/10 of 1 Ether. And they trade like any other futures on our exchange, or on our, I should say, our standard operating hours. They open on Sunday at 5 p.m. Central Standard Time, and they close on Friday at 4 p.m. Central Standard Time. There's a 60-minute break each day. That's when we run our batch and we send all the activity over to our FCMs. The minimum price fluctuation on our contracts is 50 cents per Ether. So they tick in 50-cent increments. But since this is 1/10 of 1 Ether, the tick value is 5 cents a contract. The product code on these are MET. These are financially settled. They don't settle into physical Ether. They are financially settled if you hold to expiration. The listing cycle, they're monthly contracts. They're listed for the 6 consecutive months and 2 additional these months. And then the termination of trading, it terminates on the last Friday of the contract month at 4 p.m. London time. If the last Friday of the contract month isn't a business day, then trading terminates on the prior business day. So here's just a very simple example of an order book, just showing that this contract ticks in 50-cent increments or 50 Ether increments. So here's a simple example of an order book. And then for those that are tuning in, I'm assuming everybody has some futures experience. But what I want to talk about, if somebody is relatively new to futures, is that futures are finite contracts. They have expiration, as opposed to physical crypto trading, where you can hold some spot crypto in perpetuity. There's no expiration to the contract on the spot side, at least on just the cash equivalent. So when you're looking at futures and you're looking at an order book, in this example here, you're seeing that most of the volume is traded in the front month. So when a contract expires, and this is a cash settled contract, but when a contract expires, a trader has 2 options that they have as expiration approaches. They can roll the position if they want to maintain that exposure going into the next month, or they can close the position if they no longer want to have exposure. So what I want to touch on briefly is, if you want to roll a position, you want to maintain that exposure going into that next month, want to be cognizant of when that roll starts happening and when you see that volume start shifting from that front month over into that next sequential month, because you never want to get stuck in a thin market. So be cognizant of when that volume starts shifting. Here's an example of, here's a really simple example here. So in this, they're trading an August contract. So the black line has an August contract, or the black line signifies an August contract. You see the volume around mid-August starts spiking. It's around 6,000 contracts. And then when you get toward the end of August, that's when that contract is approaching expiration. You see that line, you see that black line drop quickly, right? August 27th, you see it'll come down all the way to almost zero. That's signifying that the volume is shifting from that front month and it's going into that blue line. So that step contract. So volume is shifting from front and it's going into that next sequential contract, which is set in this example. So I just want to be real clear. If you want to roll your position, please be cognizant of when that volume starts shifting from the front to the deferred, so you don't get caught in a thin market. So keeping on the theme of futures fundamentals, how much is one micro ether contract worth? It's worth 1/10 of 1 ether. So wherever that ether is trading, if it's 3,200, it is worth $320. So the exposure on that is 1/10 of where ether is trading. What does margin mean? Unlike stocks or, basically unlike stocks, margin in futures is a good faith deposit. It's a performance bond that you put up to take a position. Can I short micro ether futures? Yes, you can. Micro ether futures are a futures contract. Right? And one of the benefits of trading futures is that you can go short just as easy as you can go long. So if you wanted to, say, hedge some of your physical ether risk, that you own, you own some ether in your Coinbase wallet, and you want to protect yourself from some downside risk, you can go short on these micro ether contracts just as easy as you can go long. What are some of the features of micro ether at CME Group? And a lot of these benefits that you see on this slide are benefits to futures in general. But with a smaller ether contract, you can fine tune your ether exposure. It's 1/10 of 1 ether, so you can put on 1 or 2 contracts to really fine tune the levels of ether that you want to get. You can enjoy price discovery of transparent futures. These are traded on our central limit order book. The price that you see is the price that everybody else sees. You're not trading one price on one spot crypto exchange and trading another price on another spot crypto exchange. Everybody's trading the same price when they're trading in micro ether at CME Group. You can save on potential offsets with these contracts. We are offering margin offsets if you're trading standard ether, Bitcoin futures and options, and micro Bitcoin futures. There are capital efficiencies with our micro futures because they are leveraged products. You can go short just as easy as you can go long here. And then the potential tax advantages that futures offers, just traders in general, are applicable in our micro ether contracts. They are taxed at a blended rate, 60%. And I'm not an accountant, and I'm not giving tax advice here, but you may be eligible for 60% long-term tax treatment and 40% short-term capital gains treatment. So it's a blended rate, 1256 tax code, I believe it is. And then the margin on our ether contracts are relatively inexpensive. So it's about 30% of where the notional is trading. So the maintenance margin today on our Jan contracts is $111. On our Fed contracts, $112. And when you take a look at the comparison on our standard Ether contract, since our standard Ether is 50 Ether per contract, standard Ether is 55,000. So you're looking at 1/50th of the margin requirement on our micro Ether contract. And then looking at the transaction costs of spot Ether versus the micro Ether transaction costs, the exchange fee on micro Ether is 20 cents. And if you were to place a micro Ether equivalent trade on a spot cryptocurrency exchange, you could be looking at a potentially a point or a half point percentage for transaction fee. So if the cash is trading at $3,100 and you wanted to buy the equivalent of micro Ether, which would be 310, the crypto exchange fee you're looking at is $1.55. So it's 20 cents on our exchange versus $1.55 potentially on a crypto exchange that charges a half point percent. So you're looking at $311.55 in transaction. So there is a difference between our pricing versus the cash side. And then keeping on that theme, when you compare our markets versus the spot market, there's no wallet requirement if you're trading our micro Ether futures or any of our crypto futures or options at CME Group. If you're trading on a spot market, there most likely is a wallet requirement. Are there capital efficiencies with our contracts? Yes, these are all of our cryptocurrencies and micro Ether included, our leverage products. We are a regulated exchange. We are regulated by the CFTC, so our micro Ethers are traded on a regulated market. When you look at the spot market, that regulatory landscape is evolving, it's taking shape, it's somewhat regulated, but who knows what that's going to look like. Our markets offer potential tax advantage or tax efficiencies, I should say. We do have a clearinghouse, so there is clearinghouse risk mitigation in our markets. And we've been in business for a little over 170 years, so the underlying exchange experience is plentiful on our side. When you compare it to the spot market, they're relatively new, and the ability to go short is really a key, in my opinion, a key advantage to our contracts versus the spot market. If you want to lay off some of that risk that you have on the spot side, manage that risk, you can do so by going short with our micro Ether contracts. Okay, so we're going to quickly go over some of our other cryptocurrencies, because I'd be remiss just not to go over these very quickly. Our standard Ether contracts are 50 Ether per contract, so it's a relatively large contract. Everything else is similar to what we just discussed on micro Ether. They trade during our normal standard trading hours. The minimum price fluctuation on our standard contract is 25 cents per Ether, but since it's 50 Ether per contract, it's $12.50 a tick per contract in our standards. These are monthly contracts. They're financially settled, and they settle on the same day as our micro contract, which is that last Friday at 4 p.m. London time. When you take a look at our Bitcoin and our micro Bitcoin futures, our micro Bitcoin futures are 1/10 of one Bitcoin. The price fluctuation on that is $5 per Bitcoin, which is 50 cents a contract. They're traded during our normal trading hours. They're monthly contracts. They're financially settled. When you look at our standard Bitcoin contract, our standard futures, it's 5 Bitcoin per contract, so it's a relatively large contract. The tick value on that is $5 per Bitcoin, so the tick value is $25 a contract because that is 5 Bitcoin per contract. Okay, so let's take a look at, here's a very simple trading example of somebody looking to express an opinion in micro Ether, but before we go into this, is who is trading these micro ether contracts? Who's been trading them for a month, and how are people using them? And what we really rely on is data that we see from an exchange, from our matching engines, who's coming into these markets. But we really do rely on our brokerage partners to inform us on how their customers are trading our markets. And what they're telling us is that they're seeing two things. One, they're seeing current futures, so current customers of theirs trade our market or trade these micro ether products to express an opinion, either a long or short opinion, or manage some physical risk that they have on the spot market. But what they're also telling us is that they're seeing customers come over from the spot market. They're seeing customers come from Coinbase, from Kraken, from other exchanges that have never gotten into these markets before, and come to these markets through this contract to, one, learn futures, but also manage their risk on the spot side. So here's a really simple example of a trader wanting to express a long opinion on Ether. And so this person decided to go long just one Jan contract in micro Ether. I took this pricing from earlier today. Trader buys one Jan contract. The Ether is trading at 3,075. The notional exposure of a micro Ether contract when it's trading at 3,075 is $307.50. So they bought it around 8:30 this morning. Their position is on. They're long one contract. Around 12:45, contract or Ether is trading at 32.65 and a half. So the notional on that is $326.55. So that's a price appreciation of just what is that, almost $200, $190 right there. So the profit on that price appreciation is $19.05. The margin required to put that position on from an exchange standpoint is $111. So you put on $111, you have a position for 4 hours, you made 19 bucks here. But what I've been looking at recently is the range that this market has been trading in. And when you look at how volatile this market is, historical volatility in Ether is right around 60%-ish. When you look at the NASDAQ's trading a little under 12. And I was looking at the range, the average daily range that Ether trades in. And just in over the last 5 or so trading days, the average range looks to be 175 points. So this market moves, it swings, and it swings all day long. When you take a look at what micros in general are affording the active individual trading community is the ability to scale. We've seen this time and again with all the micros that we've launched. Somebody that may have been a 1 or 2 lot mini trader is going into micros, and these smaller contracts are allowing them to trade 2, 3, 5, sometimes maybe 10 contracts at a time, and they're allowing them to scale in and out of positions. So that's another piece of feedback that we've gotten from our brokerage partners is scaling is a really big lure for traders to come into our micro complex. So in this example, a trader wanted to go long 5 micro Ether and this example was put together before the holidays when micro Ether is trading at 45.79. So this trader put on a long position at 45.79 of 5 contracts. Price appreciates, it's up to 4,700. They want to take off 3 contracts, but they want to leave on 2. They want to maintain some exposure to see if they can get their a higher price, the price of what they believe the price is going to appreciate. So they leave 2 contracts on. They take another contract off at 47.20 and their last contract off around 47.60. So just as this trader did, they scaled out of a position. They left a portion of their position on to go soar to a higher profit target. you can do the same scaling into a position. If you see price appreciate or depreciate to say that it's this trader's flat at 47. So price starts to depreciate down to 46, 46.80. They could put on a contract at 46.80, another at 46.5, another at 4,600 even. So scaling is something that we're seeing traders use our micros for. And then when you take a look at risk mitigation in CME Clearing, with these volatile markets, some investors are curious about risk mitigation, and CME Clearing is well equipped to handle risk. Like I said multiple times throughout today's session, we've been in business for over 170 years, and we've been assessing and mitigating risk that entire time. So we do have a clearinghouse that is all actively monitoring everybody's position and being in contact with brokerage firms and FCMs to ensure that risk is being properly monitored, mitigated, and managed at all times. So taking a look at who is coming to CME Group to trade our cryptocurrency products, not just micro ether, but our whole suite of cryptocurrency, our standard ether, standard Bitcoin, micro ether, even some Bitcoin options. We're seeing pension funds come to us to diversify assets and then hedge some of their physical holdings. We're seeing hedge funds come to our markets using our products to execute long short strategies and also hedge some of their holdings. We see prop firms use our crypto products for market making and also to go long short. We're seeing retail active individual traders use our markets to go long short, to hedge some of that physical risk that they have. And also we see a lot of active individual traders using our options on our Bitcoin side. We're seeing options traders go long and short. We're seeing options traders write contracts to generate income strategies. We're seeing some miners come and use our contracts to hedge some of their physical exposure, also to express long and short opinions. And we're seeing corporates come in to our crypto complex to hedge some of their Bitcoin receivables, but also to manage some of their cash for treasury management purposes as well. So it's a really healthy mix of market participants coming to our markets using our cryptocurrency complex in various ways. And if you want any more information on this product, you can go to cmegroup.com. On the top side, in the top banner, there's markets. You can go to cryptocurrency, and there you'll find our micro ether page where you can go over all the contract specs that we just discussed. You can find our daily price charts, open interest graphs, any information that you want on this product can be found at cmegroup.com. And if you want a copy of today's presentation, you can email activetrader, all one word, at cmegroup.com, and I'd be happy to send this to you, or I will send this over to Bastian and team at Tradovate, and they'd be able to distribute as well. So with that, I'll wrap there, and we'll go into the Q&A. But I want to thank everybody for tuning in, and I hope that you found some value in today's session.
All right, thanks, John, for that. That was very informative, and I think for the most part everything was very clear, and I didn't see really any questions come in. As you said, it is recorded, and both the slides can be sent to you, and also the recording itself of the webinar we'll put out. I think we'll put that on YouTube like we did with the others, so you'll have that as well. Now, one thing that I noticed was also the exchange fees on the micro ether are significantly less than the micro Bitcoin. So that could be interesting for, like you said, for those scaling in and out of trades, or just trading more contracts or more frequently. That could be a good alternative to the micro Bitcoin in that respect, right?
Yes, that's correct. they're definitely more cost effective. 20 cents
Okay.
versus $2.50.
Right. Yeah, that's interesting. Let me see if there's anything else here. I don't immediately see something. Yeah, if anyone has any questions, feel free to post them now and we can go through them. Otherwise, if there are questions that come up as you're watching this, either later on or any questions come up, feel free to reach out to us. We can answer any of your questions through email, or you can give us a call. Oh yeah, that's a good question. Of course, when will it be available to trade on Tradovate? It is in fact available. You can trade it. One thing to bear in mind is if you're looking for the symbol, type in the full symbol. So in other words, not just the MET, but add the month code, the month symbol, and the year as well. That way you'll find the symbol. Which what's the current front month, John?
January is the current front month.
Okay. Okay, got it. So it's the which is F2, right? MET F2.
Got it. Yep.
Okay. Yep. So just search for METF2 and you will find it in Tradovate. You can pull up a chart, you can pull up a DOM, and you can see what the liquidity looks like. Yeah, I don't see any other questions here, John. I think you were so clear and transparent. Everything was understood right away.
Well, I hope that's the case. If anybody has any questions, you can reach out to that active trader alias at cmegroup.com. I'd be happy to answer you guys directly as well.
Perfect. Well, thank you, John, for this presentation and for being able to help if anyone has any questions in the future. And hopefully we'll do one of these again if the CME comes out with even more micro contracts. We'd be happy to do this again.
Yep. Stay tuned. I'm sure we're going to be sending some stuff out shortly.
Excellent. That's interesting. All right. Well, thanks again, John, and thank you everyone for taking the time. And we'll be hopefully in touch soon. Bye-bye, everyone.